Welcome back to Alpha Recap. Markets closed for the day, and we're walking through the biggest moves and the threads that connected them. As always, if you have questions, you can reach us at stockalpha.ai. We'll get to those in the Q&A. Jonathan, great to have you.
Thanks for having me. Excited to dig in. It was one of those days where sector headlines, not one big macro print, really set the tone.
So, what really stands out here is the memory story. Walk us through that. Industry notes said DRAM prices jumped on March 16th, and memory names rallied. What's the takeaway?
Right. The note on DRAM price increases drove a pretty broad rally in memory suppliers. To put it simply, DRAM price strength suggests supply and demand were moving toward balance, and that can lift revenue and margins for memory makers if costs don't rise at the same time.
A classic supply-demand rebalancing. Higher prices without higher costs equals better margins. I mean, when you step back and look at this, how direct is that impact for the big memory firms?
It's fairly direct for the pure memory vendors and server memory suppliers. DRAM is a product you sell by the gigabyte. When pricing improves, revenue follows quickly. But there's a timing nuance. Manufacturing and inventory cycles mean the benefits show up across a quarter or two, not instantly.
And yet we saw an odd split inside semiconductors. NVIDIA finished the day down about 1.5% to roughly $180.25 on heavy trading. The volume was about 160 million shares. That's elevated. Thoughts on why memory rallied but NVIDIA dipped?
It was a rotation play. Memory price strength feeds directly into chip makers that sell DRAM, whereas NVIDIA's business depends on GPUs that use discrete memory types, like GDDR or high-bandwidth memory. Analysts note the linkage exists, but it's product-specific and sometimes lagged. Also, when a megacap name trades on heavy volume and dips, it often signals name-specific flows, profit-taking, or rebalancing, even if the broader sector is up. Yeah, absolutely. So you get semiconductors moving, but the movement is fragmented across subsectors.
Short reactions. Right.
I mean, when you step back and look at this, traders were parsing company-level catalysts alongside industry pricing. Guidance, order flow, and product cycles all mattered in parallel.
Let's pivot to industrials and energy. Valvoline launched a new product today, Premium Blue One Solution Gen 2, an OEM-approved tri-fuel engine oil claiming up to a 25,000-mile drain interval extension. That's a big headline. How material could this be?
Big move. If the claim holds in real-world fleet trials and OEMs adopt it, fewer oil changes per mile could reduce maintenance frequency and operating costs for fleets. That can change fleet economics. But the company didn't give revenue guidance, pricing, or margin impact, so analysts will look for pilot results and OEM uptake before pricing it into forecasts.
Right. And the other thing is, Impact also secured a 6-year compliance contract with Moss Energy Works, covering 56 renewable natural gas and solar projects. That sounds like durable multi-year revenue. Explain why that matters.
Contracts like that provide visibility. They're services tied to compliance work that matter for tax credit qualification in project economics. For a small services company, a 6-year deal anchoring dozens of projects is a meaningful, predictable revenue stream. Analysts like contracts because they smooth some of the cyclicality you see in project-based businesses.
DMEGC Solar also showed a new PV portfolio at European trade shows, trying to grab channel partnerships. So industrials had both product innovation and distribution plays. I mean, honestly, I was a bit surprised by this one.
Yeah, that tracks. Taken together, these items point to companies trying to lock in longer commercialization tails. OEM approvals and multi-year services are two ways to do that.
Quick reaction. Wow, big move.
Switching to healthcare. Clinical progress and federal validation matter a lot for small health tech and medtech firms. Laronix launched an investigational voice restoration study for ICU patients at Greater Baltimore Medical Center. And Home Care Hub received a Phase 2 SBIR award from the National Institutes of Health for home-based care research.
Trials and NIH grants. Those sound incremental but important. Explain the signal there for listeners who aren't deep into biotech.
Sure. Clinical trials are binary catalysts. Early safety or feasibility readouts can re-rate a company if they're positive. NIH Phase 2 awards de-risk development by providing non-dilutive funding and also signal federal validation. Both increase news flow and help companies move toward commercialization or partnerships with health systems and payers. Exactly. They don't guarantee success, but they increase the cadence of milestones that investors and potential partners watch closely.
Let's touch governance. Adobe was downgraded by Argus to a hold after news of the CEO departure, and Micros named a new CEO. Why do leadership changes make markets jittery?
Leadership transitions introduce execution uncertainty. Analysts worry about strategy shifts, cost discipline, and the speed of execution. Even without immediate financial changes, a downgrade or extra analyst scrutiny can pressure sentiment until the transition plan is clear.
Short reaction?
On the small cap front, we saw a handful of momentum names move on heavy volume. One example, Mass Therapeutics jumped about 3% to $2.52 on roughly 154 million shares. Low-price stocks with huge volume can move sharply. Analysts caution they're often tied to retail flows or squeeze dynamics.
So volatility can be amplified in those names. Not uncommon, but worth flagging. Let's summarize patterns from today. What themes should listeners take away?
4 main themes. 1. Tech divergence. Memory price strength lifted DRAM suppliers even while marquee AI chip names pulled back. 2. Companies are seeking revenue visibility through services and OEM approvals like Impact and Valvoline. 3. Government and clinical funding continue to de-risk early-stage healthcare R&D. 4. Leadership and governance changes are reintroducing near-term volatility in big software names.
Good, concise. Quick rapid-fire recap of the biggest numbers for listeners who want the headlines.
NVIDIA finished down about 1.5% to roughly $180.25 on about 160 million shares. Mast Therapeutics was up about 3% to $2.52 on roughly 154 million shares. Valvoline launched Premium Blue One Solution Gen 2, claiming up to a 25,000-mile drain interval extension, OEM approved. Memory names broadly rallied after a March 16th report of steep DRAM price increases. Impact secured a 6-year compliance contract covering 56 renewable natural gas and solar projects. Laronix launched an investigational ICU voice restoration study, and Home Care Hub won a Phase 2 SBIR award from the National Institutes of Health. Adobe was downgraded to a hold after a CEO departure, and Micros named a new CEO.
Thank you. Quick reactions. Yeah, that tracks.
What to watch when the market reopens. Follow-up DRAM pricing reports and commentary from major memory vendors. Any company commentary or order flow signals from NVIDIA. Valvoline updates on OEM pilots and pricing. Adobe succession details and analyst notes. Impact project milestones and interim readouts or enrollment updates from Laronix and Home Care Hub. Also watch volume and price follow-through in high-volume small caps.
Before we wrap, a short note on tone. Analysts note these developments affect sentiment and can create stock-specific trading opportunities, but they don't replace due diligence. This is informational, not personalized investment advice.
Right. We're reporting what the data and headlines suggested about market positioning and risk. Nothing here is a buy, sell, or hold recommendation. Just context for decisions investors and advisors might be making.
Final takeaways, 3 bullets. 1. Memory price strength was the dominant theme and suggested cyclically improving dynamics for DRAM suppliers. 2. Sector-level rallies can coincide with big-name pullbacks, so look for rotation and company-level catalysts. 3. Product approvals and long-term service contracts are showing up as ways companies try to create predictable revenue. Analysts note leadership changes and clinical milestones will be near-term volatility levers.
And to add, confirmatory data matters. The next DRAM reports and any Valvoline pilot results or Adobe succession details will help separate headlines from durable trends.
That's a wrap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. See you next time.
Thanks, everyone. Stay curious and stay cautious out there.